to Sectors Up Close. I'm Elena Casas. Today we're focusing on renewable energy and my guest is David Cecere, Chief US Market Strategist at Morningstar. As President Biden heads to Sharm el-Sheikh for the first global climate summit held in Africa, investors are under pressure to fund the switch to renewables. On Wednesday, the UN unveiled a list of $120 billion worth of green energy projects around the world it's hoping private investors will fund. The volatility sparked in oil and gas markets by the war in Ukraine has pushed governments away from fossil fuels in search of energy independence, while the flagship Inflation Reduction Act, passed in August, offers $370 billion of incentives to expand renewable energy in the US. But the promised transition still seems to be generating more heat than light in the stock market. This is the iShares Global Clean Energy ETF. You can see there that after a spike in August when the Inflation Reduction Act passed, it's given up most of those gains in the last 2 months. And if we look instead at the Nasdaq Green Energy ETF, focusing on US rather than international companies, the performance is even worse. It's down almost 20% year to date. So why is green energy still not providing returns for investors as well as for the planet? Let's ask Morningstar's David Cecere. David, hi, thanks for your time. Do you think part of this weakness recently is down to the political uncertainty in the US? Are investors concerned that Republicans could reverse some of that green energy investment?
Yeah, I think it's a combination of a number of things. So again, the uncertainty coming into the midterm elections, is certainly going to be one of those. So at this point, the polls are still calling for the Republicans, to take the House. I think it'll be a few more days, maybe this weekend, that we see whether or not, that ends up coming true. And that's certainly put a negative sentiment, in this space. But irrespective of whether or not, we have a divided or a unified government going forward, this is one of those areas that I just see a lot of long-term secular growth. And I think that's irrespective of the political environment and irrespective of even, some of the near-term economic weakness that we might see. Looking at, the industry in and of itself, about 40% of U.S. power generation in the U.S. right now comes from either clean or renewable energy. Our forecast, that's going to increase all the way up to 65% by 2030. And in fact, that's even a greater amount than what the US EIA is projecting right now. And in our view, really the differential between us and the EIA is that we're projecting faster and greater uptake in solar.
Given that growth projection then, why aren't these stocks trading at higher values already?
Well, and that's part of why I think we see a lot of opportunities, in the markets here today. So depending on, what specific sector you might be looking at within the clean energy, there's a whole multitude of stocks that we think are pretty significantly undervalued that we rate, 4 and 5 stars today. So I think some of it is that, we did see a big spike up in August, after the Inflation Reduction Act was passed, but after that big spike up, a lot of them sold off with the rest of the market, with the technology sector selling off as well. So I think now is really a good time for investors to be doing their due diligence and starting to build positions.
Are you expecting a tipping point to come relatively soon when the market sees that producing electricity, especially via solar, is going to get much cheaper than fossil fuels and money starts piling into this sector?
Well, I don't know if it's necessarily a tipping point per se, but for long-term investors, I think the more analysis they do of the sector and really understand the long-term growth trend here, the more we're going to see people getting more excited about this space as well. So, for example, the Inflation Reduction Act contained about $370 billion worth of incentives, for clean and renewable energy in the U.S. And I think that's actually going to help transform and pull forward, the amount of clean energy and specifically solar adoption, here in the U.S. The other part of the act that's really important for investors and for those companies here is that those incentives are going to last for the next 10 years. And so for companies that are involved here, I think that gives them, the confidence that they're going to be willing to invest, greater amounts of capital expenditures here up front, knowing that they've got a 10-year payback period in order to be able to earn that back.
So how would you best advise investors to get into this space now? How can they capitalize on this investment that's being made?
Well, there's a couple of different areas, that we cover that we think are, especially interesting. So first would be the solar area. And there's really two different areas in solar that we're looking at. There's the utility scale and then the residential. So the utility scale is really going to have, most of the incentives and most of the growth, in that area. So as I mentioned, First Solar is one of those stocks that's really going to benefit from the Inflation Reduction Act. It remains, one of our best ideas, in the sector.
Utilities, David, have traditionally been seen as a space that's quite difficult to make money from. Is this changing with the switch to renewables?
Well, we do think it is changing. So, utilities actually have been overvalued, earlier this year. They have come down and they are starting to look, more interesting to us. And I do think it's a good way for investors that are looking for dividend income to invest in probably a little bit less risky situations than some of the solar stocks, directly. So I think the utilities are well positioned to grow their long-term earnings, as they transition here. So the stock that's really most emblematic of this is going to be NextEra Energy. They are the largest developer of renewables. However, we do think the upside is already priced into that stock and it trades, close to our fair value. So I'd say two of the best ideas that we think are most leveraged to the upside here that are trading at discounts would be NiSource. So that's a stock we rate with 5 stars, trades at almost a 25% discount to our fair value and pays a 4% dividend yield. The other one being Dominion. So again, another 5-star rated stock, trades at about a similar discount as NiSource, and it pays over a 4% dividend yield.
Thanks so much for that, David Sekera, Chief US Market Strategist at Morningstar. Well, that's our look at the renewable energy space. I'm Elena Casas, and this is Reuters.